Hello, and welcome to the latest episode of Zach's Tech Talk Tuesday. My name is Ryan McQueeney. I'm coming at you from a very, very chilly downtown Chicago here from the Zach's Investment Research offices. Today, we're going to be taking a look at the start of Q4 earnings season and putting the spotlight on a few major earnings reports from the tech sector that we have coming this week. I tend to do this type of episode about 4 times a year. At least once a quarter, I like to take a step back during a busy week of earnings reports and talk about a few stocks that are reporting. Sometimes I focus on the cloud plays and the up and coming growth stocks. This time around, though, since it is just at the start of earnings season, we're going to do a general overview of what we're looking for from the whole season, but then also looking at 3 really blue chips in the tech sector that are reporting today. So let's start right there with the overview of everything, and we'll start with a look at the broader market. Total earnings for the S&P 500 index members are expected to be up about 10.7%, almost 11% year over year. And that's supposed to be coming on a little bit over 5% higher revenues. The estimate I'm most recently seeing is 5.3% revenue growth for the S&P 500. And that's pretty good, no doubt about it. But it is sure to seem like a significant slowdown for those who had gotten used to healthier earnings growth and revenue growth rates in recent quarters. I mean, in the most recent quarter, last quarter, Q3, we had 25.7% earnings growth on 8.4% higher revenues. So, we'd have to do quite a lot of work there in terms of beating earnings to the upside to get to that nearly 26% growth. That there's some room there for the revenue surprise to make revenue growth comparable, which is debatably an even better indicator at this point as we think about the effects like tax law changes are having on the bottom line. Perhaps even nicer to see. It might be even nicer to see a strong revenue performance, which might speak to a continuing strength in terms of consumer and enterprise spending, which says something good about the economy without a doubt. That being said, it does look like we're on track for a slowdown. And is that slowdown going to be something that is the indicator of that peak growth is past us? Well, typically, yeah, that's how these things happen. So that's not necessarily surprising. It is certainly going to be a talking point. And I think, for prudent investors out there, it's just important that you manage your expectations, that you understand how these processes and cycles work, and, that you adapt and evolve your strategies, in conjunction with what we know to be true. I did want to point out kind of on that topic, Shiraz Mian, our director of research here at Zach's. You guys, if you are a follower of other Zach's content, have almost certainly seen Shiraz's work on Zach's.com and his face on our wonderful video series. He publishes some in-depth earnings commentary several times a week during the report seasons. And I just want to point out something he said on Friday about this kind of peak growth stance. And he said, quote, "Whether we look at the growth picture on a quarterly basis or on a rolling quarter basis, there is no doubt that growth peak is now behind us. The question now is how much estimates for the coming quarters have still to come down," end quote. So Shiraz, looking at these trends and estimates, is confident we are past peak growth, and is now preparing for even further downward earnings estimate revisions. And so what does this mean for tech? Well, the stock market was closed on Monday, obviously for the Martin Luther King Jr. holiday. But before this morning, so the most recent data would have been Friday's close or sometime midday Friday. We had Q4 results from about 55 members of the S&P 500, and that accounted for about 15.1% of the index's total market cap. Of these reported companies, earnings were up 16.9% on 9% higher revenues, with 71% of companies beating EPS estimates and over 56% beating revenue estimates. So let's think about what I just said in terms of broader market estimates. We were looking for about 11% EPS growth. So far, we're actually at about 17% EPS growth, with nearly 71% of companies beating estimates. So, that's decent if that trend keeps up. The earnings growth rate's certainly going to look a lot better and a lot less like a significant slowdown than maybe the initial estimates had been suggesting. I'd caution you on taking that 71% beating estimates as a real significant indicator of anything. When estimates come down significantly for a specific sector, which we certainly have seen for tech, especially given the Apple profit warning and some profit warnings from some key chip suppliers. The 71% of companies beating estimates maybe is not a great indicator of anything necessarily, just because those expectations have come down. That being said, for tech, I think the story here is going to be that deceleration. If we're talking about the broader market is starting to decelerate in terms of earnings and revenue growth, the one of the clearest places you're going to see that is the tech sector. Growth expected to just be just 3.8% on the bottom line in the current quarter. As I mentioned, that really has a lot to do with the Apple profit warning. Some of these profit warnings from key suppliers to Apple, key suppliers to other huge members of the industry. And, after two really, really strong quarters for tech in terms of earnings growth, to see just 3.8% growth expected as we kind of head into the busy period, perhaps not the greatest sign for the bulls that are hanging around still for the tech stocks. That being said, we'll get a pretty good indication as to whether this is going to be an upside surprise quarter for the tech sector within the next few days, as we have several key industry bellwethers reporting, and that starts with IBM actually this afternoon. Apologies if you're getting to this later in the day or later in the evening on Tuesday and you're already have seen IBM's results, but I just want to touch on IBM because this IT giant is scheduled to release its quarterly report after the market closes. IBM, not necessarily the hottest new thing in tech for the past several years, but certainly still a good read on several key segments of the tech sector. The stock has moved about 6% higher in the past month, although it is still down more than 25% in the trailing year. Expectations IBM will be looking to outperform tonight sit at $4.81 in earnings per share and $21.75 billion in revenue, according to our Zacks consensus estimates. The earnings consensus has trended consistently down over the past few months, though, and even into this week, we've seen two downward estimates coming in the past 7 days. The Zacks consensus has shrunk by 5 cents in 60 days. 5 cents on a $4.81 consensus is not a significant chunk of the in terms of percentage-wise, but we don't like to see earnings consensus start to trickle down right into a report. Typically, that is not a super good trend. Moreover, the revenue consensus represents a decline of 3.5% on a year-over-year basis, and really the story for IBM over the past few years now has been the company's struggle to consistently improve sales numbers. So those are going to be the goalposts for tonight. Yeah, the earnings goalpost specifically has moved already. And as I said, I caution you on just looking at an earnings beat when the goalposts have already moved. But IBM, definitely could continue this little rally we've seen in the past month if it can surprise to the upside. Another company that would love to see that this week is chip giant Texas Instruments. It is expected to post its report on Wednesday afternoon. Shares up 13% in the past month, but have definitely struggled in the past year, down about 16%. For the soon-to-be reported quarter, Texas Instruments is expected to post earnings of $1.24 per share. The company has seen no negative revisions to these estimates in the past 60 days, but the consensus has fallen by 8 cents over the duration of the quarter. So I believe just kind of sluggish guidance in the most recent report, the report for Q3, that initially brought the consensus down. In terms of revenue, we're looking for $3.75 billion in total sales, and that's basically flat year over year. Interestingly enough, Texas Instruments does have a Zacks rank number 4 sell heading into the report. This is due to negative estimate revisions for its full year and next year EPS estimates. Earnings growth is still expected to top at 30% for the current year, which we're about to get Q4 for. So it would be total look back on the full year, we're looking for 30% earnings growth. But that is expected to pull back then by about 1 to 2% in fiscal 2019. So we're definitely going to be paying attention to guidance, probably more so than anything else. Texas Instruments, a great illustration of what happens as we go through the peak to trough earnings process and sales process in the chip stocks. These are cyclical companies in nature. A 1 to 2% pullback in earnings growth is certainly not that bad of a peak to trough move if that's all that happens. We'll see, though, exactly what Texas Instruments thinks will happen in fiscal 2019, and that should be, as I said, a really great indicator for the chip sector, the chips industry, and we'll get an even better one, perhaps, on Thursday afternoon when Intel files its latest earnings results. We're looking for that after the closing bell on Thursday. Intel has actually held up much better than some of its peers in the past year, which have, of course, been battered by fears of an end to this historic chip supercycle. INTC, the stock there, is actually up over the past year and has rallied roughly 13% since the market's Christmas Eve lows. Coming into this with a little bit better of a price performance chart than many of its giant chip stock peers and rivals. Analysts expect Intel to post earnings of $1.22 per share for this quarter. That would come with revenue of $19.01 billion, according to our Zacks consensus estimates. And these results would represent year-over-year growth of 13 and 11.5%, respectively. The earnings consensus has actually remained unchanged in the last 60 days. I think we've seen some estimates both up and down, just the consensus has stayed flat. And of course, just as I mentioned for Texas Instruments, the real key for Intel's report is going to be what it says about 2019. Currently, for Intel, we have estimates calling for the company's earnings growing a measly 0.3% this year, so basically flat. Intel's guidance is going to tell us if there is going to be a pullback or not, or if they're expecting solid earnings growth. And again, just a great indicator of how this end of the cycle is going to hit chip stocks this time around. I think, generally speaking, you have a lot of people optimistic that this peak to trough move is going to be different this time around, given the secular growth trends that we're still dealing with, given that money is still flowing into data center development, given that artificial intelligence and autonomous driving and the Internet of Things offer all these cool new growth markets that are really just getting started now. With all that said, though, we've already seen signs in 2018 of demand issues that are causing issues with pricing and supply buildup at everything from the niche chip companies to the major companies like Texas Instruments, NVIDIA, Micron even. So we'll see. And Intel and Texas Instruments will give us a great indicator. This week, we also have IBM as a reminder. So those are the three I wanted to put the spotlight on this week. Like I said at the beginning of the episode, 3 blue chips, 3 bellwethers for the industry, probably give us a good idea of some other reports coming out later in this report season. But if you're interested in at all in tech right now, in the direction of tech in 2019, you're going to want to keep a close eye on these reports and everything else we get over the next few weeks. That's going to do it for us today. A brief preview for all of these, but I think an important one nonetheless. As a reminder, if you feel that I missed something or if you want us to cover a different story, shoot us an email at podcast@zacks.com. Make sure to check out all of our other audio content at zacks.com/podcasts. And remember to subscribe and leave us a rating on Apple Podcasts. We're also available on SoundCloud, Spotify, Stitcher, basically wherever you can possibly get a podcast these days. Thank you so much for listening to today's episode of the Zach's Tech Talk Tuesday podcast. We'll see you next time.